Hey guys, Trades Action Plus here. Back today, just want to bring up some general stock trends, market trends, and just kind of some stocks that I'm looking at getting into this week or this month. I just have the general view of the S&P up here. I usually use the SPX, just kind of looking at the way the market's trading here. So I have this channel chart here just showing the way the S&P is tracking here, and it looks pretty bullish still, even though we had this recent pullback in the S&P. We do have a pretty big sell-off here in the RSI, but we also have this gap here where we can also trade up to fill that gap. But if we're looking here, some of the fundamentals that we had in March, I believe, are not here now. So, you know, some of the sell-off that we see here, I definitely don't see that here. You know, especially when we had all these like 4 or 5 circuit breaker down days on huge sell-offs here. So I definitely don't see that happening here. I know that if we look at where we're at now, we're basically under the highs that we made in March. So we definitely had a decent pullback at this point. I believe the S&P is probably down about 9 to 10% from its recent top that it made here. But the breakout from this wedge pattern here, this bullish pattern, I believe that would take us all the way down to the 3290 point. So if this breaks underneath the 3290 point, which it easily can, the following day, I would definitely be cautious. If we do see a bottom put in place and maybe something that triggers this the S&P to swing forward, maybe like positive stimulus package news or some virus news or something like that, that could definitely cause it to swing back up. But there's definitely some kind of weird trends going on here, and I believe it's mainly a sell-off, maybe with some of the mutual funds taking profits. Not really the mutual funds, but the managers themselves taking profits for like the customers for the remainder of the year. Because if you were in tech, you know, if you look at the power shares QQQ here, which kind of shows the overall tech base, you'll see the tech. I mean, here's the track of where we were at the height of prior to the March lows. So we were trading about the QQQs were about a $235 price range, 236, and now we're at the 303 level prior to the recent pullback. So we had a pretty big pullback in tech. I would say at least 5 or 6% more than we saw in the S&P. But some of the parts of the market that are definitely staying strong, we did have some pullbacks in small caps, but I do see the small caps as being, if you're looking at investing in mutual funds or ETFs on a long-term basis, I think small caps definitely are the way to go. Kind of the small mid-cap stocks. Looking at the March high here that we set in February prior to the March downfall, you'll see that in tech we had a huge run up, but in the S&Ps or in the small caps we're still kind of chopping along in this level here. So long term, I think, you know, a few years out, kind of like the reopening play stocks or the mid caps and the small cap plays. So that's kind of like what I'm staying in. I'm a younger guy. I still like to invest in mutual funds and ETFs because they just hold that whole basket of stocks that basically lower your risk. I do like investing in individual stocks, but like I said before, they do make up a very small portion of my overall portfolio. But I do have some I'm looking at here and some I've added to my list that I do have holdings in. Looking at Tesla stock here, I'd like to look at this next. Since this is a very hot topic now and a very hot stock at this point. I did buy some pre-split level, so around this time period here. I believe the price was about at the 1410 level that I did buy it pre-split. So I did have a huge run up here, and I did sell some on the run up, but the remainder of my shares I had a stop loss at around the $460 price range. So I didn't quite sell at the top, but I did sell here for a pretty big profit for this whole range up. But at this level here at 330, at the end of the day I added a few shares, and I look to accumulate more around this level here. This was the level that Tesla had some really good strength pre-split. So this was about the 285, 280 level here. So if it hits this level, I'm sure This could easily happen within the next day or two. It wouldn't be that hard to hit this level the way that it's been falling. But I do see some huge positive news come out. You know, battery days on the 22nd, which I believe that, you know, stocks like this could have a run up a week prior to the event that's actually happening. So if you're waiting to buy into the stock, I wouldn't wait till a day or two before the event. I would kind of look at adding maybe to some shares a week prior to the event. So that's my plan. That's what I'm doing myself. I've also looked at Zoom. Zoom's not quite at the level that I see buying into it yet. It has this huge gap fill here where it gapped up after the earnings call. So we could easily see it filling this at about the $325 price range. Or we could even see it go lower to the previous, the support level that I see here at about the $260 price range. It might not get to that point, but if it does, it could be a good buy at that level. Beyond Meat I really like here. I know this is kind of like an obscure stock. It is pretty hot right now. But they did have news that they recently opened up a plant in China, and they're going to start manufacturing some of their product there and selling it there. So that's huge news. So I think this could run up to previous highs if it breaks through this $143 level here. As you can see here, they try to pull new highs. It just keeps getting rejected here at 145, 146, 143 here. It recently hit a high of about 143. So if it breaks above that 145, 146 level, it could definitely run higher. But as you can see, the strength in this stock, I believe it today at some point it was up about 8.5%, and that was going from this morning, I believe it was down 1.5%. So it had a huge run up, and it still finished up 6.87% at the end of the day. So it's very strong. The same is Virgin Galactic. I've been looking at it here. I bought some shares around the where did I buy them? About the $16 level here, and that's about the level that's been trading all the way back in April time period. This is about the average here. So, you know, I believe this is a strong level for Virgin, ticker symbol SPCE. They have some news, I think, coming out in October 20th, October 22nd. So that could definitely be some positive news that could lift the stock maybe to the previous recent highs here of 25, 26 bucks a share. So I think if it definitely breaks out above the $19 level here, I think we could definitely see it hit a little bit higher. But I'd probably take profits on that. I'm not a long-term holder of this stock, so just kind of looking at it as kind of a swing trade. And same with, let's see here. Well, Workhorse stock is definitely an interesting one. Today it was up about 22% at some point, which is amazing. It had a huge run up, and it traded all the way up to, I think, the $24 price range. So if we wouldn't have had this pullback in the market, if we would have had a positive day, I would have thought that this thing would have hit $26, $27 a share today. So I think these three stocks, I think Beyond Meat, I think Virgin Galactic, and Workhorse definitely have been pretty strong today. The same as GMHI, which let me scroll down here on the list. GMHI was only down a fraction of a percent. Today it was actually up at a certain point earlier today, so it had a decent run up. Keeping my shares long term. This is a SPAC holding that's going to go to the open market here. I don't know when that'll happen. I assume it'll happen in the fourth quarter from the recent story that I've read. So definitely holding GMHI, not a super amount of shares, but just enough to get in the stock where you could make a decent amount. Just, you know, on the way these SPAC trades have been kind of playing themselves out. I got into the Tortoise group, so that played out fairly well. I got in there at about the $23 price range, so that definitely, I made about double on that trade. And again, I'm not a long-term holder. These are basically swing trades in my account. So at long-term trades, I'm definitely looking at Apple, Skyworks, the Amazon trade. So definitely looking at those. Apple in the short term, I think after hours here, we saw some pullback in Apple. I think it's down to maybe the $110 price range, somewhere around there. But just a warning or a caution, I definitely could see it filling this gap here, which it gapped up at open. And this is a gap that went from about $96 up to $102. So I do think Apple at about $100 price range is an excellent buy. I'll definitely be adding to it at the $100 price range. This is one of those stocks I look to hold a very long time. So it does pay a dividend of 82 cents a share, so that's not too bad on about $112 a share stock. I believe if it pulls back to this level, the support is pretty good. This is the level that is pre-split. So, post-split we had this, this is where it announced the split itself. We had this huge run up here. And then after the split, it actually ran up some more, I believe, to about the $136 price range. And then we had this huge tech sell-off. So that's why I think this is a very key level here, because this is the pre-split announcement level here. So this is kind of like where I was trading at. So some news on that. I believe on September 12th or 13th, they're going to be announcing new Apple iPhones. So not sure if that's priced into the stock right now, but if they do announce new phones, especially with 5G, the new the circuitry they're going to have in it, the supplier Skyworks will also go up too. So this has had a decent pullback as well, from 154 all the way down to $130 a share. So I definitely like these both. I like Skyworks. It does pay a dividend of about 50 cents a share, which has gone up recently. I like Skyworks long term as well. And the good thing about Skyworks, it's in many other cell phones, not just Apple phones. So you kind of get a more diverse stock. But Skyworks does tend to run with Apple. If you overlay these charts, Apple over Skyworks, you'll see they look similar in like the way they do track. But I do like Skyworks as well. And I'll probably cost average into some of these soon. Just kind of looking at the way the rest of the week kind of plays out here. Again, I think if we do see some stimulus package go forth, some positive news, I'm sure that the president will come out with some China trade deal or something. So we could see a huge swing in stocks. If not, I'm a long-term holder. I look to add to some of the positions that I have, and I do put stops on some of the positions that I do have, some of the more risky stocks. And I do also hold cash. I do also try to carry at least a 20 to 25% holding in cash at all times, looking for any big dips that could happen. So, it's always good to have cash on hand too. And even if you don't have cash, if you don't like holding cash, I do like some of the precious metal plays like GLD or SLV. Those are always good places to hold, especially in this type of market. So, all right, guys, thanks for watching.